Okay, just going to record a quick video about the TRIN indicator. The TRIN stands for Trading Index. It's also known as the ARMS Index. Originally an indicator developed by Richard Arms in 1967. It's been around quite a long time and not changed very much, and I'm suggesting that there is kind of a better TRIN indicator around. I'm going to show you how to construct that. First of all, just to recap what the TRIN indicator is measuring. It's measuring the advancing issues divided by the declining issues divided by advancing volume divided by declining volume. So one of the neat things about the TRIN data is that there are no kind of price points in it. It's about the number of issues that are going up and down and volume that's going into buying and selling. So from that perspective, I quite like it because it's not correlated directly, at least, with price. So that's what the indicator looks like. Let me just show you what the data looks like on a chart. So I'm bringing up first of all the chart of the E-mini. This is the continuous contract daily data only on TradeStation at es.d. And to add TRIN data to your TradeStation chart, you need to make sure that you're plotting your original E-mini data in the local time zone. Because the TRIN data is coming from the New York Stock Exchange, your E-mini data is coming from Chicago, they're in two different time zones. TradeStation doesn't like you combining different data streams from different time zones. So what you have to do is make sure that both of those data streams are set to your local time zone. So if you do that, and then we'll go into insert symbol for the TRIN, and we go $TRIN, prompt for format, click prompt, and let's just check the time zone is set to local and click OK. And there we go. That's what the raw TRIN data looks like. You can see it's an open, high, low, close plot with some quite high values and kind of a lot of hum here. Let me just change the formatting of this to make it a little bit more intuitive. And we go to style and then just set this to line on close, and you can see that's what the data looks like. Now, a couple of problems kind of obvious with this. When we have kind of sell-off days here, for example this day, we end up with a spike up in TRIN value. Similarly, this was a sell-off day here, and we get a spike up in the TRIN. Another sell-off day here, spike up in the TRIN. So the first problem with the TRIN data is it's not particularly intuitive. You've got sell-off days being represented by spikes up. The second thing is that you can see when we look at kind of the back history here, we've got a lot of spikes and then quite a lot of hum. The up days don't seem to be represented by equal kind of spike downs. So the problem with that is because the indicator is a ratio. Big up days are represented by small down values, but big down days are represented by very large up values. So when you do any kind of averaging of TRIN data, that kind of mismatch of this spikiness of the data will mess up your averages. Let me just add an additional data stream to this chart, which is the NASDAQ data stream. So on TradeStation, that's TRINQ. Again, we'll plot in the local time zone, set the styling here to a line on close. And there we go, you can see the NASDAQ data there. So we now have New York Stock Exchange and NASDAQ data all on one chart. You can see the NASDAQ data is very similar to the New York Stock Exchange data in terms of the spikes, where they happen and so on. So we've got the same problem kind of going on here. Now, it's fairly easy to fix kind of these days. We've got fast computers and we've got kind of smart algorithms. And the 3 or 4 changes I suggest that you make to the TRIN data are to, first of all, make sure that you're using a log of the value, and that'll turn it into a linear function. The second thing to do is invert the data, so your spike ups become spike downs, so they're more intuitive with what you'll see on your price bars. Multiply the value by 100, so we got kind of some kind of normalization. And then why not include the New York Stock Exchange as well as the NASDAQ data together? So if you make those 4 changes, that creates what I've called the better TRIN indicator. I'm just going to switch that on because I've got this on the chart. So format analysis techniques, I'm just going to switch that on, and you can see what it actually does. This is the better TRIN indicator here. I'm just going to turn these 2 data streams to hidden. Okay, there we go. So we've just turned those 2 other TRIN data streams to be hidden. The indicator is still referencing those data streams, but they're not kind of messing up the chart here. And you can see here we've got kind of large buying days being represented by spikes up on the indicator. and then you've got large sell-off days like this one here being represented by negative values on better TRIN. So it's far more intuitive to see what's kind of going on. You can also see on the indicator we've got some bearish and bullish divergence signals kind of on the chart. As we're making kind of lower lows on price here, we're not making lower lows on the better TRIN value. You've got a couple of bullish divergence patterns kind of coming in here. So as this bottom is being made in price, you can see the TRIN values are starting to tick up, and that shows a nice kind of advance in the market kind of going forward here. Lately we've been kind of topping out with making new highs on price, and you can see we're starting to see bearish divergence on the better TRIN indicator here. So the other nice thing about this, you can also make this into an intraday chart and see what's going on during the day. So let me just set these data streams to intraday charts and just make sure that we're going back about 5 weeks in data there. And you can see what the intraday better TRIN values kind of look like. Selling represented by negative values, buying represented by positive values. You can see as we're kind of topping out the markets here, the TRIN values start to go to zero, then turn negative as we're selling here. We go down to make a bottom here, and as this bottom's being made, you can see the TRIN values starting to turn up, kind of going into a rally phase here. So there's the better TRIN indicator. It's just some simple mathematical changes to the raw TRIN data that you get from your data sources, just to make it far more intuitive to read on your charts and understand the fundamentals that are going on underneath the price data itself.